How do retail traders perform in general? Stay tuned, we're going to talk about that next. G'day traders, I'm Stacy Burke from Stacy Burke Trading, and today we're going to be talking about how do retail traders perform in general. So I was skimming through some information which I found quite interesting. Sort of gives a breakdown of how the sort of flow of retail traders progress through the different levels of trading success. You know, you hear the rumors 90% of traders fail, and I've often said it's probably 95, and often you hear the term 1%ers. So let's take a look at the chart. Let's start at the bottom. That's probably the best way. So generally all traders come to the markets. All traders come to the markets with the idea of wanting to get rich quick, either replace an income, change employment, you know, or live the trader lifestyle, get the Lamborghini, the yacht, the pretty girls, all that sort of thing. But everybody comes to the market with the idea of starting to and wanting to get rich. As that journey continues, roughly 40% of retail traders only trade for about a month. So in that process, 40% of them drop out right away. And again, there's a new flow of new people coming in, generating, if you've watched some of the videos on how the industry works, a lot of the marketing and the advertising, it's built on generating new clients all the time because they need that constant influx of new players in the game. So 40% of traders only trade for 1 month. 80% quit within the first 2 years. So if you make it past that first month, and you know that ladder sort of starts to build up with people that have been there for longer and everything else, 80% of those retail traders quit within the first 2 years. Now, you've heard my story. I've talked about blowing up small accounts. My initial education was absolutely fantastic, but I didn't follow that. And I made the circle of mistakes over and over and over again. Now, why have I passed that point? Probably partly because I'm stupid and I refuse to give up, but persistent, resilient. I could see that there was a way, and I would be making money, but then I would repeat stupid, emotional, impulsive, illogical trading mistakes because I didn't understand a few basic concepts, you know, in terms of managing my risk, asymmetrical risk-reward opportunities, and having just a simple model to follow. And that sort of came together, as you've heard me talk about, listening to Peter Brandt, studying his material. And you know, you don't arrive anywhere. It's still a constant challenge, but the longer that you're sort of in that level and you proceed to that higher 7%, which remain after 5 years, you start to, I think, evolve past certain things. Now, my accounts that I blew up were small, but I had a winning percentage of trades, but I would blow it up on 2 or 3 trades because I would lose my emotional orientation. I didn't have a business plan. I didn't understand the business of trading. I was focused on trying to make money fast. I would bring baggage to the market with me to try and make things happen really quickly, which inevitably ended bad because I would, you know, take an impulsive trade, which was the wrong trade. I would average into that trade into a loser. I would hold on to it for a longer period of time until the pain point where it just got too big, and I would cash out and take a big loss and blow out all the wins. So only 7% remain after 5 years. 1% profit net of fees. Now, I believe that this zone in here is where we talk about, you know, Mike Bellafiore talks about one good trade and all the diligent work that they do every single day at SMB Capital, where they review their trades as a team. They have feedback, like Ray Dalio talks about meaningful discussions about material. He gets a lot of smart people around him, and they in a meaningful way, in a respectful manner, he gets really smart people who are going to disagree and challenge him. And the idea with that is they can filter out the best ideas and then code them in. Now, as a retail trader, we might not, like Ray Dalio at Bridgewater Capital, he spends hundreds of millions of dollars trying to figure out how to win the game. So as a retail trader where the odds are stacked against us, you know, I talked about shifting to end of day, and the idea is that I'm piggybacking on the larger, longer time frame movement of money over the monthly ranges of movement. Now, in this bracket here, I believe fundamentally that that's where the daily routine comes into play. And I talk about this, if you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders. It's about ritualizing your routines and sharpening that axe every single day, pushing the boundaries for constant progress. Even if you're starting off with micro lots, until you sharpen that process down as fine as you can get and keep getting better, monitoring your results. What did you learn each week or each month? Going back, reviewing, building your playbook, but just constantly not only simplifying your trading system, but narrowing it down to, even 2 or 3. I heard one trader talk to this morning. I was listening to a podcast down at the beach, and he day trades, but he said himself 2, 3, or 4 trades a month are where his money is made. Now, I believe that even on end of day, over the 25 instruments, there's going to be 3 or 4 really solid ranges of movement where they do 700, 800 to 1,000 pips. That's where the money can be made for me on my model. So instead of me trying to hit a trade every single week, I need to filter that down even more, and that's been getting better and better and better. But it's still a challenge every week because we can't read the chart. We can read it from right to left, but we can't read it from left to right. We need to learn to trade it forward and get better at it every single day. The 1%ers have done that. Now, whether or not they've had a better start, they've had better access to information, or they've learned in an institution, or they've had somebody show them, is irrelevant, because at some point they're going to get to that level, they would have had to blow themselves up. They would have had to make a lot of stupid mistakes. You can't progress up that ladder without making those mistakes, because the only way you know not to make them is from making them. So, just a little breakdown of how retail traders perform in general. Again, focus on constant progress. Break everything down into the finest details during your trading day, your trade setups, your routines, all of those things. Simplify them, get better at them, master them, and then trade bigger. Hopefully you got some value out of today's video, traders. Stay disciplined, trade smart, get better at it, and trade bigger. Have a great trading week.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.